you ever wondered if you are filing your GSTR-1 correctly every month? Is there a rule book that you or your team follows, or does each team member have their own way of preparing and filing GSTR-1 each month? That could be detrimental for your business. Hello and welcome, I'm Annapurna from Clear. In today's video, I'll take you through the ideal GSTR-1 filing flow to file a perfect and accurate GSTR-1 return. If you follow all these steps, you can avoid trouble with the tax authorities and be free from any demand notices and penalties. I will also share with you some interesting facts and pro tips in this ideal GSTR-1 filing flow video. So let's get started. Overview of perfect and accurate GSTR-1 filing. Here is a flow chart of the steps to file an ideal GSTR-1 return. Right from data ingestion and validations to reconciliation of data with e-way bills, invoices, sales register and other ledgers, this video will take you through every step that you must not miss out when you file GSTR-1 return. Data ingestion. Here are types of documents to be uploaded in GSTR-1. Business to business or B2B, business to consumer or B2C, exports, SEZ supplies, non-GST supplies, and advances. It is important to note that an invoice may be created with many fields including mandatory, optional, and conditional. All these documents must be ingested in the requisite format. Here's a checklist of the mandatory fields of an invoice or credit or debit note or CDN to be reported in GSTR-1. Document type code, date, number, invoice number, then recipient billing name, then billing GSTIN, place of supply, value and rates. In case of exports, note that the type of export needs to be mentioned in the invoice. Also, the additional details must be mentioned such as shipping port code, shipping bill number, and shipping bill date. Also, there are multiple ways to ingest data into GSTR-1 return, such as the manual entry, Excel or spreadsheet templates, JSON, upload, ERP connectors, and ERP integration. Businesses can opt for the type of ingestion based on the volume of invoices, time they plan to spend, accuracy they want to maintain while filing GSTR-1, and their data security policies. It's time for a pro tip. If you want to ensure that data you ingest into GSTR-1 return is free from all errors at source, then you should check out Clear GST filing solution. With automated data import that has custom mappers and error correction at source, you will ensure that the data imported is 100% free from any errors. This will also save your time and efforts in undertaking multiple manual reconciliations at later stage. Moving on to step 2, preemptive data checks after ingestion. Cross-checking data is very important step for accurate GSTR-1 filing. It is very important for businesses to validate data and fix errors at the ingestion stage itself so that they do not come up later at the time of filing on the portal. A few recommended checks to run are registration status of the seller and the customer's GSTIN, type of GST based on the place of supply, for instance, CGST and SGST or IGST. Invoice duplication in case of re-uploading data after correcting errors. Missing mandatory document details. Correctness of the tax computation based on GST rate and taxable value, or mismatch in tax rate versus tax amount. Let me give you a pro tip here. Undertaking the data checks manually can be very time consuming and error prone. Instead, opt for a GST solution like Clear GST that has a feature that displays errors on the screen and lets you fix them on the go. This will save you so much time and effort. Next, we take you through Step 3, reconciling the sales register with the general ledger. Did you know that most businesses leave out this step at the time of GSTR-1 filing? However, any transaction missed to be reported in GSTR-1 attracts interest and penalties. Hence, it is a very crucial step that every mid and large-sized enterprises must undertake. In this step, businesses must compare the data appearing in their general ledgers or GL, such as the revenue and output tax ledgers, with the data in the sales register. Hence, this type of reconciliation helps the team identify discrepancies and take suitable corrective steps. Let me share some of the best practices to efficiently undertake GL versus sales register for your enterprise. The master list of GL codes and revenue and tax GL descriptions must be kept up to date for comparison to be relevant and faster. The reconciliation can be carried out at a PAN or GSTR levels. Data must be massaged accordingly. The inclusion of all mandatory fields must be validated before the reconciliation begins. Ensure that the mandatory fields in GL are reconciled with the corresponding details in the sales register. Multiple line items bearing tax and cess values for a particular document number with a particular GST rate must be compared against the respective tax GL values for sales register versus tax GL. Intra-PAN transactions, that is, sales data where suppliers and buyers GSTR belong to same PAN, may be ignored for this type of reconciliation. Examples include stock transfers and cross-charge transactions. Pure agent transactions are treated differently, such as RTO charges, bank loan charges, etc., where taxpayers may act as agents to collect the charges from customers and pay to the applicable parties. In such cases, the document entries will be absent in the revenue and tax GLs and must be ignored for the reconciliation. Note that for positive figures of tax values in the sales register, the GL amount in tax GL will have negative figures and vice versa. Now, before we jump to the next step, if you have any questions about the previous steps, do leave us a comment below and our team of experts will answer them for you. If you're finding this video useful, then please do subscribe to our channel and don't forget to give this video a thumbs up. Next up, we have Step 4, Draft GSTR-1 GST Network versus e-invoices on NIC or e-invoice portal. You might be thinking that when the e-invoice data gets auto-populated from IRP into the GSTR-1, then why is it necessary to reconcile these two sets of data? You must note that reconciliation is necessary because the auto-population into GST returns takes place in T+3 days. This means that it could take about 3 days for an e-invoice to reflect in your draft GSTR-1 return and even longer at times. For example, if an e-invoice was generated on 28 February, it could get auto-populated only on 3rd March. Hence, if the draft GSTR-1 was downloaded before 3rd March, there could be certain e-invoices that do not reflect. Re-uploading these e-invoices could result in duplication once the auto-population takes place. Hence, running a reconciliation exercise is important to ensure that GSTR-1 does not get filed unless all e-invoices reflect in the GSTR-1 return. Further, the GST network has clarified time and again that auto-population of details from the e-invoices into GSTR-1 is only a facility extended to taxpayers. The statutory obligation to file an accurate GSTR-1 with all the relevant e-invoices still remains with that of the taxpayer. Moving on to Step 5. Sales register versus e-way bills from NIC or e-way bill portal. If you are selling goods, you must generate e-way bills if the value per consignment exceeds the specified limit while transporting it from one place to another. It is to be noted that you can generate the e-way bills only after raising invoice for that transaction. Accordingly, invoices are classified into some categories. Invoices requiring e-invoice and e-way bill. Invoices requiring only e-way bill. Invoices requiring only e-invoice. Also, in a few instances, you might miss reporting the certain invoices on which e-way bills were created, but such invoices have gone unreported in GSTR-1. Let me share the reasons for discrepancies between the sales register versus e-way bills versus e-invoices. E-invoices generated, but e-way bills have not been generated. Cancelled the e-invoice but couldn't cancel the e-way bill. Cancelled e-way bill but couldn't cancel e-invoices. Now, e-way bills generated for delivery challans, e-way bills generated using wrong GSTIN, e-invoices generated using wrong GSTIN, e-way bills generated by others on the seller's GSTIN. Hence, you are advised to reconcile the e-way bill records every month before filing GSTR-1. This reconciliation will reduce discrepancies, ensuring compliance, and also saves your time and efforts. Let me give you a pro tip here. Clear GST filing solution provides one-click reconciliation for e-way bills and e-invoice with the register in GSTR-1 without repeat ingestion and integrations. Next, let me take you through step number 6, sales register versus draft GSTR-1. This step has two parts. In the part A, we will learn how to do reconciliation between sales register and e-invoices auto-populated in GSTR-1. It is very important for you to effectively reconcile the e-invoices with the sales register periodically to determine the discrepancies between the e-invoices and the sales register so that you don't need to remove e-invoice data from the GST portal. Also, replacing an e-invoice on GST portal, that is draft GSTR-1, will remove the IRN associated with it, preventing the recipient from verifying its authenticity. Also, let me share some of the reasons for mismatches between sales register and the e-invoices. An e-invoice has been generated with an incorrect GSTIN. Mismatches in e-invoice details entered at the time of generation. The IRN generation has failed and the e-invoice has not been generated. The e-invoice has been generated but not accounted for in the sales register. The invoice has been cancelled in the sales register but not cancelled on IRP. Sales recorded but e-invoices not generated due to it getting time barred, that is, inability to report on IRP after the 7-day window applicable for taxpayers with an annual turnover equal to or more than Rs 100 crore with effect from 1st May 2023. It's time for a pro tip again. Clear GST comes with an automated data reconciliation tool that will help you in saving ample time. It will help you detect the mismatched and missing invoices even at a PAN level with 100% accuracy. You can also rectify the errors on the go. Coming to part B, let's see how to do reconciliation between sales register and non-invoice transactions. This is the final step before you file an accurate GSTR-1 return. In this step, you must reconcile the B2C or business to consumer transactions and all other non-invoice transactions like non-GST supplies in the sales register with the draft GSTR-1. Even though the draft GSTR-1 contains transactions that were imported or ingested from the sales register, there could be still some discrepancies due to human error in case of manual entry or due to some other technical errors involved in data import. Further, this step ensures that all the sales are reported in GSTR-1 return and helps you arrive at accurate tax liability. And the last step is step number 7, filing of GSTR-1. You must file draft GSTR-1 on the GST portal using EBC or DSC, whichever suits your business. Further, make sure to add an authorized signatory before filing. An ideal way to do this would be by not going out of the present GST filing solution into the GST portal, as that would involve data handling errors. So, I have a pro tip for that. Clear GST solution comes with an end-to-end filing facility at a PAN level that eventually allows auto-importing of draft GSTR-1 for multiple GSTINs into the GST portal. Also, it saves ample time and effort for your team. How does Clear GST help in filing an accurate GSTR-1 return? Clear GST helps in filing an accurate GSTR-1 return 3 times faster thanks to its unique features. Some of them I've mentioned before in this video. First of all, single file data import. Different document types such as the invoices, credit notes, debit notes and advances can be ingested in a single file for multiple GSTINs. AI-powered matching. AI-based data reconciliations help match over 6,000 invoices per minute for 3 times faster filing. GSTN grade validations. Multiple checks for errors and duplicates right from data import stage until filing ensures only 100% accurate data is reported. PAN level recon filing. PAN level reconciliation between invoices generated on IRP with sales register helps identify mismatched or missing invoices. Also, data from multiple GSTINs can be pushed to the GST portal with a single click for filing. 25 plus smart reports. A variety of smart, insightful reports on tap help in decision making as well as in identifying discrepancies and scope for tax savings. We are now at the end of this video and we hope you found this video helpful. Please note that you can download a free copy of the Ideal GSTR-1 Filing Flow Guide by clicking on the link given in the video description below. If you would like to try the Clear GST filing solution, an all-in-one cloud-based GST toolkit, you can click on the link given below and request a demo. Thank you.